Hello friends, so you asked for more details on testing trading systems, so here you go. But before you watch this one, please check out the previous video regarding the same topic. The link for the video will pop up somewhere around the screen, and let's not drag this out and jump right into trading. So let's kick off with $5 on the forex pair of the British pound and the Japanese yen. Let's open an option predicting a rise in quotes here. Eyes on the chart, let's decode the signals from my trading system. Looking at the chart, we can track a prolonged dip that lasted about 10 to 15 minutes. After that, there's a price correction. The chart bounced up from the lower Bollinger Band boundary. And what about the indicators? The green bars of the MACD histogram are hinting at a potential reversal and the crossing of lines, and Williams is climbing out of the oversold zone. So I'm betting the price will head upwards from here. And friends, in the last video we covered the basic principles of testing a trading system. You wrote me back asking for more details on this topic, so today we'll continue. But let's pause to lock in some profit. First trade brings our balance almost $9. Sweet result. Let's up the investment ante and keep going. Hey there. So I've been at this for over 2 years, but I still vividly remember my first steps. When you're devouring heaps of info, watching videos, and trying to turn that into making your first buck, but your head's a mess and your balance is still in the red. So, to help you make your first money and get a taste of the big bucks earned with your own smarts, I run weekly deposit boosting marathons on my Telegram channel. So, join my Telegram channel and take part in the marathon. Together, we'll rev up a deposit from $100 to $5,000, and we start with just $100. Trading happens every day from Monday to Friday. I'll share signals and you'll learn and earn alongside me. This isn't a scam, no funny business, trust me. So, here I will leave some reviews from my partners who have already earned, and hop over to Telegram, shoot me a message, and I'll spill all the beans for you. And now, let's get back into testing trading systems. So in the last video, I talked about the key stages of creating a trading system. That includes picking indicators or other analysis principles. Next, you need to compile a list of signals, run historical chart tests, and analyze which signals yield the best results. Testing the rules you've created is the most crucial and responsible stage because the future of a trader depends on the test results. And you can test a trading system manually or use software. Manual testing takes more time, but it allows to get a better feel for the market and the principles of your trading system. So if you're doing this for the first time, I recommend spending time to do it manually. The testing period depends on the time frame you plan to trade on. And friends, let's take a break and get back to our trading. Alright? This time I'll open a trade for a decrease, and let me explain my logic here. So basically, as we discussed earlier, there was a decrease, then a correction, which we profited from last time. But there was no global reversal, volatility dropped, and we've entered into a sideways movement. And now I see two levels, support and resistance respectively. So I expect the price will oscillate within this channel for now, heading towards its lower boundary. So back to testing. There are general recommendations for choosing the period over which to test the system. If you plan to trade on a daily chart, the testing period should be at least 5 years. And if you're working with a smaller scale than a day, test for at least a year to account for seasonality. Alright, trade completed. We're done with this pair and we're moving on. So we're opening a trade for a decrease. Here we see a very similar pattern but with less volatility. That is, in this currency pair, the fall was smoother and the correction was more rounded. And with low volatility, I'd pay more attention to the Williams indicator now, which is bouncing off the overbought zone. So I expect a move down approximately to this point. So we were talking about the periods over which to test your system. That is, if you trade within a day, roll back the chart for a year and check how your system would have performed historically. And you might ask, why so long? Such recommendations come from the statistically required minimum amount of data if you want to get really solid results. Let's take another break. We have $28 on the balance. Let's see where else we can earn. So let's open an option for a decrease in the rate of quotes and figure out what signals we see in this situation. So Williams is in the oversold zone and the MACD lines are diverging. The green goes below the red. I would now look more at the candlestick close. Let's draw a line along them, alright? And at the highs, we'll draw this line too. Thus, a channel is now emerging for the price to move downward. And as you can see, there is room to move to its lower boundary. So that's where I set the next target. And there is room to move. Back to our conversation. Such a lengthy period of historical data is needed for tests to check the system under different circumstances, not only during periods of rapid growth, but also during a crisis or recession. So the trade has closed, but let's keep watching this pair and continue. The longer the period tested, the more reliable the result will be. And why is this necessary? If you look at the behavior of charts during an economic upturn, almost any trend position will yield a profit, which is not the case during a recession or crisis. And that's why it's necessary to understand how and what data to collect during testing. We'll talk about this later, but for now, I'll open a trade for a decrease for the same reasons. Nothing has changed. Let's observe and continue. So we've rolled back the chart and are methodically moving to the right. The main thing is not to peek at the further movement. For this, hide the continuation of the chart off screen. Record in a table the date and time of the trade opening, the rule by which you open the trade, the expiry time as well as the time frame on which you traded, and this is the minimum data set. I also recommend recording the market situation. Was there a flat at that moment or was it a trending movement? As a result of analyzing these data, you will already be able to understand a lot. For example, what time of the day the system works better and under which trend it yields the maximum profit. Back to trading. The trade is finishing. Let's increase the investments and find a new opportunity for profitable trading, alright? So let's open a trade for a decrease, friends. Now let's look at the chart. Note that we are currently trading in a downtrend, okay? So there was a drop in price here, then a correction, after which the price reached a certain level, as you can see. In this case, the level of resistance. I'm now expecting a rebound from this level. At some point in the future, the price may break through the level and go higher if a full-fledged trend reversal occurs. But for now, within the span of 1 minute, there will be a decrease. And moreover, the last green candle was quite large, and such strong candles typically retrace, at least by half, immediately. And in trading, strong levels rarely break on the first try with low volatility and without any news-driven event. But there is a reason to close the deal in profit. We have $184 on the balance and we continue. So the correlation between currency pairs is visible. So for the same reasons, I'm opening a deal for a decrease. Also trading on a downtrend. There is a resistance level The chart touches it but does not break through. I expect a correction and a decrease in price. And let's return to our main topic. I've only told you about the minimal set of data that needs to be collected for analysis. For more complex tests, there may be more data to consider. Sometimes the highs and lows of candles are tracked, what result the system gives if trades are opened at these limits. But I believe that you should delve into such details only if your system shows positive results with basic values. Then you can fine-tune it. And if the system is overall negative, minor details will not fix it, trust me. Alright, the trade closed. It brings us $331, but in my opinion, my forecast was absolutely correct, while the chart didn't fulfill it fully. So, I will continue with this pair. I see no point in dragging it out. Again, I trade on a decrease. Even by the shape of the last candles, we can judge that the fall will continue. And if you notice, Williams is approaching to exit in the overbought zone. So when you have collected all the data about open positions with the results in a table, it is necessary to analyze the tests and determine how effective your trading system is. And the results can be unexpected. Moreover, it's important not only to look at the overall profitability, although you should certainly start with overall profitability, but other parameters are important too. For example, the total number of loss-making and profitable trades will show you the margin or of safety of the system. If the overall balance is positive, but with a decrease in efficiency by just 5%, you would be in the red. Such a system is not suitable. There is a profit, friends, but again, the movement was too small. Therefore, I'm waiting for the continuation of the feast and once again trade on a decrease. This time, the indicator signals are even more apparent. Williams has finally exited the overbought zone, and the red column of the MACD histogram has indicated a reversal. It's also interesting to analyze such a parameter as the maximum number of consecutive loss-making trades. This is an important parameter from a psychological standpoint. When you know that the system gives good results in the long run, but at some point there is a string of failures, knowing the acceptable limit helps you not to panic but to confidently continue towards your goal. And I also recommend plotting a profitability graph. That is, not only calculate the total profit for the year, but also what your balance will be at the end of each week and month. And we'll discuss later why this is critically necessary, but for now we'll log in profits. This time the forecast was 100% accurate, so let's look for a new opportunity. So this time I will open a trade for an increase in the exchange rate of the euro and dollar currency pair. Let's look at the chart where we see such a pattern. There was a smooth decrease and then the chart hits a level of support. The last three candles indicate a consolidation of price and an attempt to turn the market around. Let's look at the indicators. We have a green MACD column. Williams hasn't exited the oversold zone, but it's close to doing so. But overall, with such low volatility, I expect there to be a bounce within the scope of another candle. Then, possibly, it may move down, but this is not certain, as they say. And although it might even turn around, but I don't really believe in it. Again, there is no volatility, no player activity basically. So the forecast brings profit, and we need to look for a new opportunity in the market where the signals will be clearer. So we'll open a trade for an increase. In this case, the indicator signals speak for themselves. The MACD lines have crossed from below upwards and are passing the zero mark. Williams has entered the overbought zone too. So there is a resistance level that has already been breached, so I have no doubt about the increase. And back to the topic. Why do you need to calculate the balance based on the results of each week and month when testing? Suppose the system gives a 100% return over a year, but for the first 3 months, you are sitting at a 100% loss of the initial balance. You need to see if the system suits you. Do you have the ability to sit in losses for this time without getting into debt or loans? And what if this period is extended? Alright friends, our deal has closed. Excellent forecast and profit, but let's move on. So we'll open a trade for a decrease. Here are the same eloquent and understandable signals, only in the opposite direction. Clearly, currency pairs have an inverse correlation, and going into debt for trading is the last thing you should do, okay? Seriously, never go down that road. If you see that your trading system can go into a slump for a while, figure out what balance you can start with so that you can avoid loans and still not live on bread and water. And you gotta test your trading system on all the markets you plan to play in. Sometimes it works like a charm on one asset but bombs on another. From the data you collect, you can decide how much dough to throw into a deal and what kind of losses you might be looking at. So let's take a breather and jump back to trading. Our little deal is wrapping up. $3,613 in the bank. Let's scout for the next opportunity. So trading on the drop now. Let me walk you through what I'm doing. Basically, the indicators are shouting that things are heading south. So we sit tight through the current correction, and after that we dive into a trade betting on the drop. I'm betting the asset's price will keep falling and our chat will keep rolling. Once you've nailed down all the parameters, you'll know where you're heading, how much capital to start with, and how much to plunk in each trade. And rookies often try to hit the jackpot fast and pour all their cash into one deal. Big risk, but greed can make you blind, you know? Again, a tiny starting capital with dreams of quick millions leads to risky moves. But when you have a system and stick to it, problem solved. And just like that, our trade is done. $4,433. Now that's a tidy sum for the balance. Let's keep rolling. Alright, I'm gonna play the correlation card between currency pairs again. It's clear that the euro and US dollar and the Canadian dollar are linked. At the peak of the candle during a correction, I opened the trade on the downside. So Williams is in the oversold zone, so I'm expecting more of a drop. Let's dive into a super important topic. In every video comment section, there's always someone asking, show us your indicator settings. They do have an impact on performance, and the thought of uncovering those secret settings often crosses the mind. Folks, I might let you down, but I'm using the most basic default settings for indicators right now. However, I also use chart and candlestick analysis. Sometimes I look at the correlation between pairs too. So here's the deal. Even if you're trying to copy someone else's signals, you've gotta put them through a test, alright? You have to do all the groundwork I've been talking about all this time yourself. So let's pause and look for a new trade opportunity, right? So I just opened a trade betting on a price drop. Let's peek at the chart and I'll walk you through my logic. The resistance level here seems pretty obvious, I reckon. Volatility is low, and basically the price is strolling in this corridor right here. I don't buy that there will be any breakthroughs with zero activity going on. I'm thinking there's a bounce coming, so I'm trading down from the top edge of the corridor. And back to our chat. The same indicator settings can give you different results depending on the time of the day, time of the week, month, even the holiday season. They act differently with different assets. And it's pointless to rely on settings and hope to always be in the green. because you don't know how the system actually works over the long haul. You run indicators with different parameters through tests to figure out which ones will be the best. And we closed another deal, friends. I suggest we stick this pair for a bit longer. And while we're at it, I want to warn you about another mistake. So, testing strategies can show you the best parameters for a system, but that's based on past performance. You will be trading in the future, and it's not going to be the same. And I have the same reason for entering a trade. I'm betting on a decrease and waiting for the movement towards the lower boundary of the price corridor. So the optimum parameter for a historical segment may become useless for the future. That's why I don't recommend getting too caught up in optimization. And proper testing and creating your own system without looking at others will allow you to understand the market better, especially if you have not traded before. You'll understand when and how you'll make profits and losses. This will allow you to calculate your financial strength so that you trade with money you can afford to lose. You should never invest your last dime or borrowed funds. Remember that. Alright, let's get back to trading. $6,873 has already landed in the balance. Let's see where else we can increase this amount. We'll open a short position and deal with the signals. Let's draw again to analyze the chart behavior. It rose until it touched the upper Bollinger Band, after which the price consolidates and the chart constructs this nice fence out of candles. But from the MACD histogram, we can infer the convergence of its lines, which suggests a price decrease. Additionally, the narrowing of the Bollinger Band channel signals a potential reversal. And considering all the signals, I have hypothesized that the price will drop. Let's watch this. And friends, independent testing will give you an understanding of the best times for you to trade and with which assets, and which markets to avoid at all costs. And most importantly, you'll gain psychological confidence because you're not guessing, you know all the nuances of the system and perceive a drawdown not as a tragedy, but as a controlled and regular process. Alright, $7,723 in the balance. With such a result, I'm going to round off and close the trading session. Friends, I tried to cover the topic of creating a testing a trading system as thoroughly as possible. There will be subtle nuances along the way, but everyone will have their own. If you have any questions, please write them in the comments down below or send me a direct message on the Telegram channel. The link is in the description below as always. But I answered the main question, why you need to build your own system and not look for magical signals. If you're in trading seriously, you will come to this conclusion eventually. Better sooner than later. If you like the video, please like this, give it a thumbs up, subscribe to the channel, and also hit the notification bell icon so you don't miss out on any new, upcoming, cool and useful videos. And to help promote the channel, obviously, in the YouTube's algorithms. So, until next time, and for now, bye bye.